Hi everybody, Luke Abraham from Aussie Capella Bar. We wanted to do a quick video as part of our first homeowner series, talking around deposits and specifically with the assistance and the use of a guarantor. So what does it mean to be a guarantor? How do they work? What are their requirements and those sort of things? So for that, let's just look at the basic structure of a guarantor loan and show you an example, just using some rough figures on the whiteboard. All right. So you want to buy a property for $500,000 and we're going to use your parents' property typically to allow you to buy the property that you want to do, which can reduce the mortgage insurance. Actually, it will eliminate the mortgage insurance, but it can reduce your upfront costs in the way of deposits. So let's say you want to buy a property for $500,000. The banks will do an 80% lend against your property. So in this instance, they would do a loan for $400,000. The remaining 20% plus the costs, less any cash that you want to put into the purchase, okay? They will do that against mum and dad's property. So let's say mum and dad's property is worth $600,000 and they might owe 200 grand on that because they're in a really good position. So the 20% plus cost is going to be around $105,000, give or take. So in this instance, the banks would physically have security of $305,000 against mum and dad's property. So they would have your loan plus mum and dad's loan. They need to make sure that this loan overall stays below 80%, which in this example it does. And you would also have an additional loan for $400,000. Now, in this example, you have now borrowed $505,000, that being the $400,000 that we were looking at before, plus the $105,000. We've borrowed that amount of debt to buy your property. Now, you've borrowed more than what the property is worth, and the risk does potentially come where if you can't make the repayments for whatever reason and the bank repossess your property, they can and will chase mum and dad for that shortfall. So that's essentially what the guarantor is there for. The guarantor is there to say, if you can't make the repayments as the borrower, we will step in and cover any shortfall should the bank repossess and sell that property. Okay, so in that example, the banks have got a limited guarantee of that $105,000. And that's what they're guaranteeing, okay? So it can be a little bit complicated. We hope that this video helps a little bit. If you wanted more information or some more specifics around your scenario and your options and your current position, please get in touch, please reach out, give us a call. We are here to help and we love this sort of stuff. We really love helping first homeowners buy their place. It's really rewarding for us and we'd love to hear from you. Have a great day. Hoping you're enjoying these videos.